Hold again.
That's right. Okay, let's start. It's already 5 minutes after 12. Good afternoon already for people in Toronto, in the area of Toronto, East Canada. For people in West Canada, it's already good morning. And I think there's 1 or 2 people from Spain. So I could say good evening for you. It's already 6 p.m. already there. So thanks for joining us. And what we're going to talk today is about the economic outlook of Canada. And basically, the idea is to have a business approach. As I always say, my background is in engineering and my master's degree is in economics and an MBA. So that's why basically my point of, and I have been a businessman all my life, an entrepreneur. So I always say that my approach to the economic figures are not necessarily that of a pure economic person. I try to always see how we can use all this information in our businesses and how do they affect us. No, so let's go forward with all of these things, okay? And so first of all, I would start by saying we are listening to questions, and I would say that in the last months I have listened to questions from different people and even from other countries. And basically, I would say that most of the questions are basically the same. No, one of the things that's calling attention a lot here in Canada is that inflation is going up, and the people is saying, okay, the inflation is high, and it's the largest inflation since 1991. That's true. Maybe you have read that it's the largest inflation in the last 19 years, which is also true, more or less, because in 2002, 2003, I think it was 2003, we were 6 point something. But I think we have already passed that limit. So we could go back already to 1991. But anyway, we'll talk and see and say, is this really important or is it not important at all? No. Second, they keep talking about employment. Unemployment is high. On the other hand, I will want to make some comments here at the end. It's not only unemployment or employment. I think there has been a change in how we define roles in a company. And we'll see a couple of figures, even, for example, what's management of companies, that industry and the GDP, it's very low. So I think things have changed a lot, and probably there are opportunities for all of us in that areas. No, are we still in recession or are we in a recovery? And that's something everybody asks. I would say we're in a recovery and we're close to where we should be, but we'll talk about this in a moment. What will happen with interest rates? And this is something important, has to do with inflation. And I'll talk about this in detail. If things don't change in 3 months, I would expect interest rates to go up. I'm not talking about treasury bills and all these things, which means debt is going to be more expensive, no? And the exchange rate, no, which is probably not something that concerns us a lot, but still, it's always a variable in the economy, no? And something very common is that people say, is this a world situation and Canada is just part of it? Or is it something that's happening in Canada, but not happening in other places, no? So we'll try to synthesize and have some thoughts about this at the end also, no? Okay, so first thing, what's really important in the economy? And I would say that we can talk about many things, but the only important thing that our leaders in a country should be thinking about is the growth of the economy. And this means the growth of the GDP, of the gross domestic product. This means that we need to have more economic activity. All the rest of the variables, when people are concerned about inflation, don't worry. When they're concerned about unemployment, don't worry. I mean, we will have unemployment if our economy is not growing. So this is as simple as a company. If a company is not growing its sales, then there's no way they can pay more or have more employees. I mean, there's no way. I mean, if the sales are the same, then maybe you can shift one person for another. You can decrease the income for everybody and hire someone else. But I mean, at the end, there's nothing you can do. Okay. Once this is done, I would say we go to the second level. And for me, the second level is employment, which at the end, I mean, being myself a social person and being myself part of a community, that's what we are really concerned about. We are concerned about creating employment for people. And then we are concerned about increasing income per capita for all the people as possible. But we cannot, once again, create employment and increase the income per capita if there is not an increase in the GDP. That is always the first variable that I would be looking at. And then inflation. If we have a very high rate of increase in the GDP, even the inflation could go negative. And that's because we are producing a lot. And probably the third is we're talking about income distribution. Here I'm going to say there are many people. Well, one thing I will say first, I'm not talking as a politician. Politicians have another speech. No, they want to get votes. So that's another speech. But many politicians, even they start with income distribution. Oh, no, we have to have better distribution among the people. That's a great speech for a politician, but it's not possible, period. I always use Bernie Sanders from the US as an example. What Bernie Sanders says is perfect. Nobody can be in disagree with what he's saying. The only problem is that there's no way to achieve it unless we increase the taxes 3 times. So that's not possible because they're starting in this part. They're talking about income distribution. We don't do it if we don't have the first 2 levels. Better living standards, reduction of poverty. We want people to have a better capacity for consumption, for saving, for investments. And we want more production of goods and services so that people can have more comfort at their homes and in their personal lives. No? And for all these, there are several things that we need. And look at this. First, we need, I would say not in this order necessarily, but we need a long-term vision for the country. And that's very important, okay? If our politicians don't have a long-term vision of what we want to be as a country, there's always going to be a complicated situation here, and we will not be able to analyze or to achieve what we're looking for. Then international competitiveness, no? And the point here is forget about complaining about wages in other places that are lower. The thing is, are we competitive or are we not competitive? And in which areas are we competitive as a country? Technology, education, health, no? Also rule of law, which I would say is probably not necessarily a problem in Canada. But then something I always talk about is business aggressiveness. And I'll talk about this in my final thoughts. This is something that we need as a country. We need as business people to be more aggressive in order to make all businesses grow faster, and then the GDP will be increased. Okay, well, before going to analyzing a little bit of the GDP, let me just go to some definitions that probably you already know, but I don't want to assume anything. First of all, the GDP is the measurement of all the production of services and goods in the country. It could be a province. We have the information by province and for a specific period, okay? So usually in the case of Canada, Canada is a very developed country. And when I say very developed, it means also information that we have. Canada started giving information per quarter in the 60s. Now we have information of the GDP per month. So I'm following the GDP per month. Most countries don't do it. Most countries do it per quarter. So, okay, so that's something that we have very specific information that we can be looking at. Okay, the GDP is measured each quarter, in case of Canada, each month, in real terms. This is above inflation. So this is a question I always receive, that people say, okay, if the GDP increased 1%, but inflation is 1.5, then we're below the level we were before. No, that's not true. Whatever rate we see in the GDP is above inflation. So that's something important. Also, usually the way to compare things is to analyze and compare between the same quarter from the previous year. Okay, not from the previous quarter. That's something that is done. Okay, could give us some information, but it's usually not the most exact. And we have to be very careful here of what politicians want to be seen in the media. So we have to be very careful what we are looking at. Okay, third is 2 consecutive quarters mean a recession. I mean, sorry, 2 consecutive quarters of negative rate, this is a decrease, mean a recession. This is not my definition. This is the definition in the economic theory. So that it is, period. Okay, whatever we look at, that's the definition. But then there's another point that makes it more complicated. If the GDP is growing 0%, that doesn't mean that we are in the same level as we were a year before. It's not. Why? Because the population is growing. So at least the GDP should be growing at a rate above the growth of the population. And this is just to keep the average per capita. In the case of Canada, our growth rate is not that low. It's 1.2%. And from that 1.2%, more or less 1/3 is internal births. I mean, kids that are born, babies that are born in Canada, and the other 2/3 is in immigration. So when we lower the immigration number of people that are coming, like it happened in 2020, we have to be careful, because then we're not going to have enough people to work in whatever we want to do, or to grow, or whatever we need. Okay, so just keep in mind that 1.2%. In average, Canada is growing above that number, but let's just keep that 1.2. If we're below 0, it's recession, but we need to grow above 1.2 in order to be richer in average per capita. No, okay. So look at this chart here in this graph. And probably first thing you're going to say, okay, wait a minute, this is too complicated. No, don't worry. It's very simple. And I just want you to look at mainly 4 points here. So the blue bars is the GDP growth compared with the same quarter a year before. Here it says GDP percent change from same quarter 1 year ago, okay? And the green line is basically the average of the last 4 quarters. So we'll say it's more or less, we'll say it's the annual growth. So it's probably, obviously it's softened, no? But so we can see probably better here. So first of all, here is 1991. I don't know how many of you remember this recession in Canada, but there was a recession in 1991. Many things has been written about that. Honestly, I don't remember that recession, but many things has been written. It's talked about that. It was when it started the free trade agreement between the U.S. and Canada, just U.S. and Canada. And they say that there was a kind of uncertainty and things change and whatever. I think it's just an excuse, but it's okay. Then it went up, and look how it goes down here around 96, not 96, okay? Here, I would say we were already in the NAFTA, the 3 countries, and Mexico had a deep recession, and it pushed down the U.S. and Canada, not a recession, but it pushed it down. Remember, there are imports and exports. Then it goes up and down, ups and downs, ups and downs. And here's 2000. Here is the dot-com recession. The dot-com recession in other countries, but here it was not a recession, but the GDP went down. Then it goes up, down, up, downs. And then here we go. You can see the 2009. This is the recession, and probably a deep recession for us. And it's when the Lehman Brothers and all these junk bonds and all these things that we had here, no? So it was 2009, which was, it lasted 4 quarters, this recession. Then it goes up and down, ups and down. We were expecting a recession around 2016, 2017, which at the end, it was not a recession, only 1 quarter. So it was negative. So that's not a recession. Then it went up. And at the end of 2019, the growth of the GDP was in the US was going so well that if there hasn't been a pandemic, read my lips, I forecasted and I said, Donald Trump is going to be reelected. So at the beginning of 2020, I said, I mean, don't worry, Donald Trump is going to be reelected. Thinking that he's going to be reelected. Because the economy of the US was going to be so strong that obviously everybody was going to vote for him, just like happened with Reagan and people like that. Obviously, the pandemic didn't help him. It went down, and here is our case. We had 4 quarters of recession. We are out of recession since the first quarter of this year, but that doesn't necessarily mean that we are okay. Now, just something that's used that is analyzed a lot in the economy. They usually say that every country has ups and downs, and the cycle is more or less 6 years. So every 6 years, we're going to go up and down, up and down, up and down, which is probably the same thing that companies have cycles, couples have cycles, friends have cycles, everything has cycles. So here it is. That doesn't necessarily mean that when we go down, we have to go to GDP negative or there's no recession. But we, as business people, we feel this. We feel that suddenly the economy is not working as well as we used to see it. And not necessarily all the industries are behaving the same way all the time. No? Okay, so let's look in detail these last quarters to see what's happening. Well, first of all, let me show you Canada in the long term. Here is the growth rate average per year in the decade of the 80s, 2.7%, 90s, 2.9%. In the first tenths of the 21st century, 1.9. Obviously, this went down because of the recession of 2009. Then in this last decade, if we only look until 2019, it's 2.2%. If we add the 10 years, it's 1.4%. So obviously, this last year of recession is making the average going down. But if we take the average of the last 40 years, it's 2.2% average growth rate of the Canadian economy. And when I say this is, I don't see the way we can grow at a higher level easily. I mean, politicians can come here and say that we are going to grow at 4% or whatever they say. No, okay. But the point is, how are we going to do it? No, it's just like companies. If you have been selling $1 million, $1 million, $1 million, and then suddenly you say you're going to say, come here and say me that you're going to say $1.5 million, I would say, yes, I agree, that's good. Just tell me how you're going to do it, because if you have never done it. And in average, we have grown at 2.2% growth rate, okay? So just looking at how other countries are in the NAFTA area, Canada 2.1, Mexico has been growing at 2.1%. I'll go back to Mexico, and the US 2.6%. And our comparison should be the USA. I mean, we are 1/10 the size of the US, but our average per capita is more or less similar. Our standards of living are similar, US, Canada. So if they're growing at 2.6%, now you'll understand when I get angry and I say, Canada should be growing at least at 2.6% average per year. This means that in 4 years, they have obviously accumulated a much better wealth than we as a country have done, okay? So that is telling us a little bit about what's going on. And talking about the US, if you read the news yesterday, I'm not sure it was yesterday or 2 days ago, I think it was yesterday, the Fed, the Federal Reserve in the US, forecasted for the next year 2.6% of inflation, 2.6% of inflation. Canada, we're forecasting 2.4, okay? Not me, but that's what people are saying, the analysts. And then they're forecasting a growth of 4% of the GDP, which is a lot because as we'll see in a moment, the US is already completely out of recession. Okay, so they have recovered their economy. So here is something. Mexico has been growing at 2.1, which is bad news for Mexico. Since Mexico, the average income per capita of Mexico is 1/5 that of Canada. I mean, the GDP, total GDP is not that different because there's 128 million people in Mexico. But if you take it average per person, it's 1/5, okay? So Mexico should be growing at Mexico, like many other countries, should be growing at 4-5% average per year if they want to reach the levels of Canada, no, which or the US. So that's a point here. Okay, now here is Canada in the last quarters. Here the increase, here it says growth rates with the same quarter previous year. Okay, so 2018 everything was great. 2019 it was not that bad. I mean, okay, but then 2020 we got in the last month, which was March, is when everything started. We went into a recession. Very important to say here, this recession worldwide was created by us human beings, which is different, and that's why it has been so complicated. Before this, it was monetary issues, it was structural issues, but today it's just that we decided that we were going to close the economy, thinking that that way we were going to get rid of a virus. If we did the right thing or not, it's something we will probably know in 5 years, not today, okay? But we did it, okay? Then we went, the second quarter, we went 12.4% below from the second quarter from 2019, which is a lot. Then 4.9 below, 3.1 below. At the end, the decrease in the GDP was minus 5.2%. So here was the beginning of the recession, and here is the end of the recession. And it's basically, I would say, not necessarily domestic issues. I mean, probably we did many good things in order to avoid a deeper recession. And maybe we did things wrong as a country. Yes, for sure. It's something new, but it was this way. Now this 2021, this is the way it has been growing. So the second quarter, it grew 11.8%. But once again, it's from the previous year. So it's after falling 12.4, we grew 11.8. Obviously, we have not recovered. Then 4, and then these, all the pink ones are the forecasts, which are basically my forecast, but based on the average of what most of the banks and the analysts are giving here in Canada. I'll show you that chart at the end. So 2.1. So we are expecting that the GDP is going to grow 4.5%. Not enough to compensate the decrease of 5.2%. Then we're expecting 4.2% in 2022, and we are expecting 3% in 2023. And remember, after that, probably we'll go back to our normal growth of 2.2%, probably 2.5. Okay, we're not, I mean, if we're going to grow faster, we need to do something completely different as a country. No? Okay. So what's the point today? Okay, I think this is very clear, this chart, and I'm going to show you here. Here it says, what we can see here is that the blue bars is the GDP, as you can see here, in change 2012 billion Canadian dollars. This is, no, it's not exactly constant, but it's basically the same thing. It's constant dollars. That means that everything has been adjusted with inflation in order to make it a good comparison. So this growth that you can see here in the previous year, it's a growth above inflation. Okay. Now, what's the green line? The green line is the green line is an estimation I do, and it is a linear regression. Okay. And a linear regression, probably you once saw this in the statistics classes. Okay. So what we do is we take all the numbers that we have historical. In this case, I'm taking from 2011 first quarter to 2019 last quarter up to here, and then we try to draw a line where the difference between the actual numbers is the least error. Okay. So what this is telling us is that if nothing had happened, if there wouldn't have been a pandemic here and a recession, we should keep going up according to the green line. Now, why is the green line going up? Two reasons. One, the population is growing. Just because of that, the GDP has to grow. There's more people working, there's more people consuming, obviously we're growing, okay? Second thing is we are, as a country, and most countries, we're getting richer. I mean, we are creating more wealth, okay? So it's natural that it's growing up, okay? So the point here is the GDP went down very fast in one quarter, let's say. Then it started going up. And my concern here is that in the last 3 quarters, it has flattened. It's not growing that fast anymore. And this is my concern. My concern is if we are going to be, we as a country, but it basically has to do a lot with the federal government, if we're going to have the skills to do whatever is needed to reactivate the economy. And we'll see how we are against the US in a moment. If you see here, right now in the third quarter, the level is between, let's say, the first and the second quarter of 2019. We're not even in the level of 2019, the fourth quarter, okay? But the difference between the green line and where we are today, it's minus 4%. Honestly, it's not bad. It's not bad. I see other countries in which the difference is larger. Okay, so the only point here that I'm concerned is that the increase has flattened, and we have to find a way. The increase has flattened, so we have to find a way that this country starts increasing the GDP at the higher rates, no? So we can get over there. Okay. So here is the comparison of 3 countries, the NAFTA once again. I love comparing NAFTA, okay? And the point here is Canada, the red line. No, obviously, red is always for Canada. So here's the red line. So we started what I did here is I said the average 2018 is going to be 100. So it doesn't matter if the US economy is larger or the Mexican economy is lower. It doesn't matter. We're putting 100. And from there, we start doing whatever we want to do. So the Canada started going up. Then it went down because of the recession. Here we are in the second quarter. It has been going up, 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 went down a little bit and went up. So nowadays, we are 1.1% above the average of 2018. Good. That's good. The problem, once again, is that it has been already almost 3 years, and the population is growing at 1.2%. I don't have the figures from 2020. Probably grew a little bit less because there was less immigration. But anyway, it doesn't matter. That's probably the 4% we're missing. That's the 4% we need to grow. Okay, but there we go. The US, blue line, here we goes up, goes down. The fall was not that deep as it was in Canada, but I mean, nothing, that different, no? Then it went up. And the point here with the US is that they are already 4% above the average of 2018. So there's a very, very small difference from the level where they should be, which is probably 1%. So they're doing well. And if they grow 4%, that'll be great. And that's a great news for us because 80% of our exports go to the US. So the better they do, the better it is for us. Okay, so that's the point. And Mexico is the green line. Mexico went into a recession in 2019, which was because of internal problems. And it was basically, the government, the new government that went to office that year didn't manage the things very well. Then here it's add the problem with the pandemic. And so Mexico has been going out of the recession around the second quarter of 2021. No, so here and then they're once again going down. So we have to take care about Mexico because they are 7.5% below from the level that they have in 2018. No, but here just going Canada and the US, here it is. I think it's a good news that US is doing good and we are in the track. We're doing well, but we still have to speed a little bit this growth of the GDP. Okay, but let's see it by industries. And when I talk about industries, let me show you this table, and I'll share it with you later so you look at it in detail. So these are all the industries that we have. This classification of industries, let me tell you that in general, it's the same around the world, but in 1994 or 1995, I don't remember, the three countries from the NAFTA, Canada, US, and Mexico, they got together and they established the same pattern and the same codes for the classification of industries. So whatever is construction for us, whatever is retail trade for us, it's exactly the same in the US and Mexico. And that makes it easy, the comparison between countries. I don't know if other countries have taken that standards, which I wouldn't be surprised. That's very clear. Now, there are basically three economies. The black one, that's just different colors. It has nothing to say, the colors have nothing to say with what it is. This is what we call the primary economy. And the primary economy has to do with the basic things that human beings need, which is agriculture, forestry, and fishing. No? And this in Canada is very small. It's 1% of the economy, even less than 1% of the economy. Okay, it doesn't mean that we do not produce in agriculture, forestry, and fishing. It means that as a very developed country, all the rest of the economy is much larger. No, the US is about 0.3%. Mexico is about 3%. But when you go to the poor countries, which are basically Central Africa, you can find that 30% of their economy is primary economy. So that means that all the rest of the economy is not developed. No. Now, it calls my attention here. Well, okay, I'll go to numbers later. Then the blue ones is what we call the secondary economy, which is mining, utilities, construction, and manufacturing. No. And then we jump to the tertiary economy, and the tertiary economy is basically services. And here we have everything that has to do with commerce, transportation, here are the airlines, and every other thing that could be, information, industries, finance and insurance, real estate, professional, scientific, and technical services. I'm here, for example. management of companies. Here are all the corporations controlling companies and in general top management of companies. And I'll refer to this later again. Administrative support, education, healthcare, arts and entertainment, and hotels and restaurants. Okay, arts and entertainments and hotels and restaurants are the two that suffered the most during the key quarters or the key months of the 2020 of the recession. Other services and public administration. But okay, so what I did here, I'm taking the last month, this is monthly, I'm taking the last month of 2019 as 100. I don't care about the number, about the amount of dollars here. I just put it everything in 100. And from there, we calculate an index. And so here it goes, here we have the two worst months, which are April and May. And then the two last months, August and September. So let me just go down. For example, hotels and entertainment. In the worst part of the pandemic, and here were the lockdowns and everything, obviously the operation was, or the volume was around 40%. It went 60% below. This is average in the country, okay, not by province, not by industries, not by type of, and also here is hotels and restaurants. So for example, I know someone who has a pizza restaurant, and he always says, I really don't want to say this because people will feel bad, but since the pandemic started, it has been the best year for me in business. Obviously, everybody was home, everybody was asking for pizzas. Okay, so he's doing great. 2020 for him was one of the best years. But obviously, that means there are restaurants that are broken or closed. Nowadays, we are between 87, 86. We don't have the figures in between, but I could tell you that it's been growing. No? Then arts, entertainment, and recreation, it's in 41, it's in 63, 67. And with the news that we have from yesterday, going to start limiting all events with more than 1,000 people, then probably this will go down again, no? And then people are going to start doing many less things about this part, no? Then management of companies, this is something calls my attention. I want to do more research on this, because this has been constantly decreasing up to 58%. And as I was telling you, management of companies, the definition is controlling companies. This is companies or areas that do the controlling of the stocks or the assets of other companies, or the top management that's in the strategic part of a company. So something has changed. And that's when I say in many things, things have changed, and the ways things we are doing have changed. And even the employments and the people we are looking to hire, their profiles have changed. We're looking for different people. No, so probably there's something here, and there's a huge opportunity for many of us to be here. Now, other things, for example, agriculture calls my attention, but this has happened in several countries. But initially, it shouldn't fall, because usually this goes with people. Whatever happens, we keep eating. So we are usually the same. So then we can see, for example, others construction went down. Now it's almost all the same level as 2019. Manufacturing. Then here we have, for example, retail trade is already above. No, finance and insurance, which never was too bad, it's already 107, and so on. No, so here we can see, obviously, healthcare and social assistance, it went down 80 to 81 and 83, and I'm really surprised of that. And I'm surprised because, unluckily, here is, for example, hospital operation, and hospitals were packed during the pandemic. So in many places we can see this were in 90 something. No, now this is 103. So I say unluckily because it has to do with the health of people. No, but that's basically. So here we can start seeing how industries are, and probably one of the things we could be thinking is, if we think some of these industries are going to reactivate fast, and more specific, for example, I would say that's something I was thinking. How fast I think air industry is going to reactivate. And that's something important, because that way it can tell us what is going to happen if we should be buying, for example, stocks from airline companies, no? If it's going to reactivate, how fast it is going to be, because maybe some of these industries are never going to reactivate. They're not never going to recover, no? So that's going to be important. Okay, so let's go to inflation. So we talk about inflation and we talk about the CPI. CPI is Consumer Price Index. So when we talk about inflation, actually inflation is nothing. When we say, how's inflation? It's nothing. It's something intangible, no? What we do is we analyze samples of goods and services, and that's how we get indexes and measurements for inflation. So the measurement that we usually use is Consumer Price Index. How are the things going for the consumers? And this is something that is done in every country. That's the comparison we do between countries, no? Okay, so first thing, the Consumer Price Index, just in case you don't know exactly what it is, it represents the changes in prices experienced by Canadian consumers, us. It has to do with imported things. So if prices increase, let's say in France, and we're importing from France, if prices increase or lower in China, we're importing from China, that affects us consumers, okay? So it measures price change by comparing through time the cost of a fixed basket of goods and services. So it's a fixed basket that was created trying to simulate what's an average consumer in Canada, which is none of us. Because first of all, initially we're above average of us. And second thing is, even between us, things are different. We have different ages. We have different patterns, like some of us have kids, others don't have kids. No, so some spending kids, some don't spending kids. Some pay rent, some own their houses. Some people like traveling, some are not traveling. So that makes it different. No. Then we have another measurement, and I'll show it to you because it's important for you to follow it. And probably you have never known what it is. And it's what we call the core inflation. In Canada, it's more specific. They call it the CPI XFET, and I'll tell you what it is. It's the CPI, and it's excluding, that's the X, food, energy, and the effect of taxes, indirect taxes, which will be, indirect taxes is basically HST. No? Okay, so that's what they are doing. So why do we do this? Why do we calculate the core inflation? The core inflation is we take out the food, the energy, basically because the volatility in those parts is much higher than the rest. So when we take them out, we can see that, and you'll see a graph in the next slide. You'll see that it's more stable, the core inflation. In the long term, okay, it's the core inflation and the general inflation, which is the blue one that we call the general index. They, at the end, they tend to be the same number, okay? So it's basically the same idea. Now, core inflation is not something we invented in Canada. Core inflation is something used around the world, okay? So we have core inflation numbers for the US and for all the countries, no? And we can see what's going on. So here is information. Yesterday, Statistics Canada released information about inflation for November, okay? So it's 4.72% general inflation, but the core inflation is 3%. Now, last year it was 0.73, in 2019 to 25. Now, the average in the last 5 years has been 167. So should we be concerned? Well, yes, actually, our inflation is the same as in the US, is 2.5 times what we usually have, which is a lot, okay? But one thing that we analyze in a moment is that there's an effect here that last year, the increase was very low. So we're compensating part of this, but I'll show you these with numbers in a moment. Core inflation, if you see it here, look, in the long term, in 5 years, it's very similar, as I was telling you. And in general, 309. So we could say that probably this is more the number where we will go later. We'll be getting into 3%, okay? More than the 472, okay? But anyway, and once again, this is general for the country, not a specific province, not a specific industry, not a specific city, not a specific neighborhood, not a specific business, okay? Things can change, okay? Now, Here's the graph I was telling you. So it's from January 2017 to November 2021. Blue bars is the general index. The red line is the core inflation. So if you see the core inflation doesn't go down, no, as deep as the general inflation, but it doesn't go up as fast as the general inflation. Good news, it went down a little bit here in November. And it's good news. In the US, in November, both the general index and the core inflation were a little bit, but they were above October. And here, the general inflation is almost the same. The difference is very small. And the core inflation decreased a little bit. So that's good news for me. No? Honestly, I was expecting that by October, both in the US and Canada, inflation was going to start decreasing. It didn't happen, obviously. No, okay, so I am a little bit not, I mean, I was not very good in forecasting when this is going to happen, but I think it has to do, you have to go down in the next 3 months. I'll tell you more about this. Look at this graph here. Here is Canada, US, Mexico, European Union, United Kingdom, which are probably, well, Japan and China will be, there is one country with which we have lots of trade. But anyway, here is the last years up to October, because we have still information for European Union and United Kingdom. But here is, look at this number, the average 2010, 2020, 165 Canada, 172 US. US is in 622 today. Okay, well, in November is 637. Okay, so obviously there are what, 3-4 times? We are 3 times the inflation that we usually have. Yes, we have to be concerned. Okay, but it doesn't necessarily has to do with something that's going to be permanent. Okay, so we have to be careful about these things. And when I talk about interest rates in a moment, I'll talk about this also. Okay, case of Mexico 624, but the inflation is usually 390. No, European Union, United Kingdom, very similar in average with Canada and the US, and their inflations are more or less the same as Canada. Okay, so I mean, not really too much to be concerned about. No, okay. Here is the inflation, the accumulated inflation. Once again, I just want to show you Canada here after we accumulate 3 years. Here it is. No, compare. And let me go to the inflation in the last November. So this is the inflation last 12 months. This is the last we have from yesterday, 472. Last year in November, last 12 months was 0.95, 217, 168, 210, 180. So there's something I like to do. It's not, I mean, I don't see anybody else doing this, but I like to do it. Let's calculate the annual inflation, but considering the history from the last 24 months. Because in some way, since the prices didn't increase in 2020, it's logical that they are going to increase in 2021. But that's one time. It's not going to continue. So if we look at this, here it is, the inflation in Canada with 282, considering the last 24 months. So yes, it's above the 2% that I would like to see. I would say Canadian inflation is in average between 1.5 and 2%. That with the natural inflation in Canada. So yes, we're above that number, okay? But we are not that bad. I mean, we are, in general, we are not that high as we can see it just from the general inflation from these last 12 months. Okay, so let's keep this just in mind. Okay, and now let's keep talking about inflation. Why? Here are the treasury bills. I didn't put it here. Okay, here it says treasury bills 3 months. Okay, okay, so let me show you here. The blue line is the treasury bills. Okay, the treasury bills is an instrument that is issued by the federal government in order to get money. It's debt for the federal government. And it's so, I mean, there's so many people buying and selling treasury bills that we usually consider its rate very representative of what's happening in the markets, no? And so we can say that considering free markets, and it is at the end, it is established by supply and demand, it's considered to be very, very representative. So here is the treasury bills at 1.8% more or less. We're talking about 2019. So by March, April, May, it went down. Why does it go down? Usually governments, and this is same thing that happened in the US, when there is a recession, they try to push rates down in order to do two things. Make it unattractive for people to save and tell people, go out and consume or invest in something productive. So that way you will help reactivate the economy. No? Now, the other, so that's basically the thing. So the other thing is that for corporations, the cost of debt should be lower, and then it's more attractive and easier to create or to finance new projects. Okay, then here is inflation, the green line. And the red line is basically what we call the real rate. This is the subtraction, which is not exactly a subtraction. It's we have to divide, but it's a compound thing. But it's basically, for simple things, we say it's a subtraction. We subtract the treasury bills minus the inflation. These treasury bills are already a compound rate. Okay, so that's so we just subtract. And you can see here the real rate is a little bit negative. It's around 0. Don't worry. I would say that if I take 20 years of the history of Canada, the real rate is 0.1%. So we're not that far away, no? But the problem is what has been happening from the end of 2020 and clearly in these last months. And the point is that the inflation is going up, real rate is going down. Now, why is it that the real rate has to be positive? Because investors have to have a premium above inflation. The other part that has to be paid is the risk of the country, which in the case of Canada, the risk of the country is almost 0. It's very, very low. So they don't care about that much, okay? The point here is, why is it that the rates haven't gone up? They haven't gone up. My perception is because the markets are waiting for the inflation to adjust once again down. So I think that in the next 3 months, inflation should be clearly start going down, okay? When we see the last chart with the projections on the forecast from several analysts, they are projecting 2.4 inflation for Canada for 2022, okay? I think it's going to be lower, but it's me against a lot of analysts. So you can believe whoever you prefer, okay? The point here and the risk thing here is that if inflation doesn't go down, then I foresee that there's going to be an adjustment of the rates going up. And the problem there is that then the cost of debt could go up, and that's not going to be good for companies, corporations, basically, and individuals, obviously. No. So one of the things we don't want is the rates to go up, but if the inflation doesn't decrease, rates will have to go up. So probably in the next 3 months, and I say 3, it's probably 5, it's probably 2, I don't know. But the next month, if the inflation doesn't adjust, we could be in a difficult situation, okay? Well, here are the rates just for the US, Canada, Mexico, just for as comparison. Average to US 0.95%. These are nominal rates. This is, I haven't subtracted inflation. 0.8 for Canada, okay? So that's inflation, obviously, it's higher, so that's why they are negative, okay? But they're very similar. And what shows you here is they're very similar. The let's call it this way, the risk, the domestic risk, the risk of the country is very similar in both countries. And it's almost 0. There's no risk, no? Mexico is almost 6%. So we're talking about 6 times that of the US or Canada. So that's obviously the inflation is much higher. In average, usually it's around 3.5%, even though today it's higher. Okay, but obviously there's also a larger perceived risk in Mexico than in Canada or the US. Okay, well, so last we get here to the forecast. Okay, and I'm finishing here and just a couple of final thoughts. So first of all, here is what we have, the actual numbers for 2020. estimated for 2021, I wouldn't even say forecast. I mean, many of these numbers, I mean, unless something really big happens in the last 2 weeks, okay, things will change. If not, they will have to end more or less here. And this is the forecast for 2022 and 2023. And here you have some of the sources that I have from different banks and organizations, like Bank of Canada, even the OECD, and things like that. Okay. The point is, I do not always have information for all these issues for all of them. So sometimes the average is with less numbers, no? And in sometimes I think I have to do some adjustments, no? So here we have, first of all, let me just go to the growth of the GDP. We're expecting 4.5, 4.2% for 2022. I said the US 4%. So we are in line with the US. We're doing well. That's not bad. And then 3% for 2023. And after that, maybe it will be, as I was saying, probably 2.5, 2.2, I don't know. No, inflation rate, as I was saying, 4.7% this year, which I think is going to be around there. Some people say it's going to be 4.8. Don't worry, just wait 3 more weeks and we'll know the actual number. No, these people are expecting 2.4%. I would expect, I hope, and that's my scenario, that the inflation is going to decrease faster and probably will be around 2%. That's my perception against all these people. Who you believe more, all these banks and all these analysts, or do you believe me, whichever you prefer? But let's say it's going to be between 2, 2.4, and obviously things are going to be changing as time passes in the coming months, no? And then 2.2% in 2023, and I would say in the long term, the inflation in Canada is always between 1.5 and 2%. That's what we call economy natural inflation. Okay, so that's usually the increase that we usually have. Then treasury bills going back, unemployment rate going down. Okay, which is good. But here I would say, I think that in employment, there's like people is complaining that they cannot find people in every industry, and the same thing is happening in the U.S. And I think that the definition of employment and the definition of what we are expecting from people has changed. No, I remember once I listened about probably a year ago in a group of people of finance people here in Canada. And one of these people, he's the head of accounting, and he said, or head of finance, I'm not sure. But the thing is, he said that they had like 4 people working in accounting, like clerks or whatever they were doing the work. So they went home and now they had to do their job and send the final things that they did, no, the final reports, no. And there was one person, a man, he said, that was considered a great employee because he was always before everybody was in the office. He left after everybody was there. He was ready to support anybody who needed help and things like that. But when he had to work at home and nobody cared about what time he started and what time he ended, nobody cared about that. The point is that he didn't deliver the type or the quality of work that they were expecting. So the thing here is that now probably we're looking at a different profile of people who have to know how to work by themselves with no supervision, people who have to be willing to work by objectives completely, people who have to be able to communicate in a very clear way because they have to send a report and they're not there to explain it, okay? And even probably people who have certain management or skills for technology. And technology is not only all the information that we're using, all the apps and softwares that we're using, but it's also now we're communicating with the world. So we have to be able, not only the technology, but also the technology to be able to communicate with other countries, no, and be able to understand each other. So that's something that's going on, no? Okay, here is the growth of the US, 5.6, 3.9 is the forecast, even though the Federal Reserve said yesterday 4% and 3%. So I mean, we're more similar to there. And here is the exchange rate, no surprises here. So don't worry about that. So just to finish, 8 thoughts. One, you have to be optimistic and proactive all the time. And I always insist on this. And I always insist, especially today, base all analysis on hard and serious facts and numbers. Okay? This has always been important. But nowadays, whatever people say, the thing is, give me the rationale for that. Where are the numbers where you are basing what you are saying? No, Facebook is not reliable. It's not, I read it on Facebook. No, forget it. No, where are the numbers? It's like a company. Don't tell me they're doing great. Show me the numbers. People come with me, I do valuation of growing companies, and they say, this company is worth $1 million. I see the financial statements and I say, sorry, this is, worth probably 150,000. No, it's worth $1 million. Show me your numbers. They don't have numbers. Just because they want to say 1,000, it's not worth 1,000. 1 million, sorry. It has 150 because based on the numbers that they can give me. So we have to be very clear in this and work with this. The recovery of the GDP is in place, which is good in Canada. Only 4% below from where we should be, which is good. I'm really not concerned down. The one thing is that it has softened and increased, and the other critical thing that I see is another lockdown, okay? And that's a risk. I don't want it, but that's a risk, okay? Now, the point here is, these are some of the issues that are affecting us from the globalized world. We didn't start with coronavirus. No, we didn't, but it's affecting us, okay? So at some point, all these things can affect us. And we already shut yesterday. We shut the borders, and we're asking people not to travel, okay, which can be negative for us, okay. But in the other side is probably it's going to be useful. We don't know. The front is we're doing many things. Other things globalized is relationships with Russia, with China, U.S., Russia, all these things with Ukraine, that are relationship with China. Whatever goes wrong there can affect us. So we are in an uncertain situation right now. As a country and as a business and as business people, Canada has to be more aggressive. I always insist this, to have a more dynamic growth of the economy. We are growing at 2.2% average, the BS, 2.6% of the US. And I always insist this when I'm talking with business people. We have to be more aggressive. Our American partners, clearly, and the Mexican partners, they are more aggressive in business. So we have to learn to be more aggressive, okay? Not all countries and not all industries are recovering at the same speed. Some will do it faster than others. We already have seen that, no? The other thing is inflation I expect it to be start decreasing in the next 3 months, both in the Canada and US, and in both countries should be around 1.5, 2%. Once again, could not happen. I hope it will, and I think it could. If inflation is not reducing the world in the next 3 months, I was saying, I could expect an increase in the interest rates. This is in order to have positive real rates. And this will have a negative impact in the cost of debt for companies and individuals. The foreseen future is still uncertain, period. It's always uncertain. Always the future is uncertain. We never can know what's going to happen. But at this point, there's so many things that could happen. And if they happen, if things happen, things can change completely in 1 month, okay? So it's difficult. So all possible scenarios are difficult. It's uncertain. So what we have to do here is we have to work with different scenarios and always think in the worst and the best and what do we expect. And we have to have strategies. Even if things are really bad, we have to be successful. Us have to be successful, okay? There's a say here, it's not mine, I like it a lot, and that say that in times of recession, you can cry or you can sell Kleenex or, sorry, I forgot the word, the cleaning, for tissues, no, for cleaning your eyes, no? So the point here is you can do it, you can cry, or you can be on the side of selling whatever businesses need in times of uncertainty and difficult, okay? Always remember that things could be worse, okay? Be thankful. And one thing is probably I always keep saying, being healthy has always been important, but probably has become one of the most precious assets nowadays that we can have. Many of us, we are grateful that we have not been infected by COVID, that we are safe, that our families are safe. And nowadays, we have to be more careful about what we are eating, how much we are exercising, how much we're sleeping, how we are living, etc. Because nowadays we have seen that it's not only about making money, it's about being healthy. And that's probably the most important thing. So last, let me show you a cartoon that I received yesterday. And it's The Simpsons. And what concerns me is that they always say that the Simpsons cartoons, all this, that they predicted many of the things that have happened in the last years in life, no? So hopefully this is not a prediction, no, but it's funny. Once again, I just hope it's 2022 and not 2020 again, okay? I hope it's not that the situation, okay? Okay, so basically, okay, here's again, well, a little bit just of what I do. My expertise is corporate finance and strategy, and I do also a lot of data analytics. I do two things. One is typical consulting projects that I do is things that are very numerical. I usually do financial analysis, investment project valuations, valuation of ongoing companies. Incredible, in this year I've done 3 valuations, no, probably more, probably 4 valuations of ongoing companies. And I have, well, one of them I met with the people, and the other 3, they are away from me. It has been online, everything. It's incredible, the things are working out. I do quite a lot of infrastructure projects. These are project finance, what we call debt restructuring. Debt restructuring is how to find the way to suggest a negotiation in order to be able, as a business, to keep running the business and paying the debt. Okay, restructuring could be renegotiation, but that's part of this. Financial modeling, lots of financial modeling, profitability analysis and economic value creation, and cost analysis and profit planning. Here are very simple things, like it's incredible how companies don't even have, for example, break-even points per business unit and things like that. That simple analysis, they don't have it, and it's something they should be doing. So we do quite a lot of this. And then environmental analysis, that's what's going around us, and strategic planning. And half of what I do is I'm giving workshops all the time. So I do financial analysis workshops, finance for non-financial managers, project valuation, cash flow, profit analysis, profitability, a workshop about the analysis of economy, how to analyze, how to understand all these things about the economy, and analysis of price and value of a company, how these things are working. No, some of you people here have been in my workshops, and I appreciate, paying to be in my workshop. And there's probably someone here, thinks one person or 2 people here who even bought some consulting projects in the last 2 years. So thank you very much for your business. No, so here I'm done, and I would like to now open, and probably we could go 20. Let me check what questions we have here in the chat, and or if you want to open your microphones, and let me just first check the chat. Okay.